What's going on, guys? How's it going? Today, I'm going to go over the markets, show you what happens today. It was CPI news, so I didn't take any trades. But we'll go over what price did. We'll go over what I saw. And honestly, why I didn't take any trades. It's pretty obvious why we don't take trades on CPI news data, but some people don't know. So let's go over it. Hopping into the charts. We open at 9:30, right? News dropped at 8:30. This is the news candle on NASDAQ, news candle on the S&P. Right in the morning, on the 4-hour, we're starting to get some bearish legs, some bullish legs. All right. We break above these highs on the 4-hour. What am I looking for? Looking for a little sell-off right of market open. Just because we're above those highs, I want to see a little sell-off. So what do we get? Dropping down the 15-minute. We have this 15-minute fair value gap here. 15-minute fair value gap. Same thing on the S&P, 15-minute fair value gap. And then market opens at 9:30. Up down to the 1 minute. We have a bearish SMT off of these highs right here and right here. So I'm expecting price to go lower. And we also take out these highs on the NASDAQ, which we don't do on the S&P. So this is my leading index. This is more of a break structure. And then we get a 1 minute for value gap. And we also get internal manipulation. So that's even more of a confluence. How many confluences is that? We got bearish SMT, internal manipulation, break of 1 minute structure, fair value gap entry, right there. You can slap on a trade right here, even though we don't trade these. This is the one setup I would have been comfortable trading. Target these lows. These lows that balance out price action off of this news candle. As you can see, we balanced it out. What price do? Came down, hit TP. If I would have taken this trade, hit TP, came back up. Search and destroy. Obviously, this is the clearest search and destroy I've seen in a minute. It literally comes up and wicks everybody in this fair value gap that move their stops to break even or just put their stops by this entry, and then they all got wicked out, came back down, filled the 15-minute fair value gap, and now it's just been chopping up and down since. But we're gonna go over why you don't trade on CPI news if your strategy says so. So I don't trade on CPI news. Why? Because there's an influx of a lot of volatility, and volatility means not as predictable price action. But today, in this case, it was pretty predictable. But usually, from my experience, trading on red folder or CPI news data isn't. And that's why you guys need to make sure you have open mind when it comes to trading with your type of style. Know what you like to trade, know what works for you, know what doesn't work for you. And then also have the discipline to put those actions into your progress, you know. Put that work in. Know what works, know what doesn't. If we say, so not everybody has the same strategy, right? Some strategies are 50% win rate. Some strategies are a 70% win rate. Some are even like a 30% win rate, and they're still profitable. But why is that? Because they have rules put in place that helps and aids their strategy and their way to help them become profitable. But with those rules, you have to be disciplined. You have to know what to do, what not to do, when to trade, what setup's good, what setup isn't. And that's the main thing when it comes to trading, is you have to be disciplined. Without discipline, you're going to not know what you're doing. You're not going to trust yourself. And in return, you're not going to have the confidence to take any of these trades, take any of these setups. Even if it is an A+ setup and you've lost the last couple trades on the A+ setup, even though your win rate statistically says that you're going to lose at least 4 of the next 10 trades, you still let that hinder you. And then you get in your mind, you get your confidence is down low, and you start hesitating on trades. You get bad entries, bad fills, and you get wicked out. Simple as that. But if you're disciplined, you know when you take the trade out the candle close or when it hits that mark, then you won't. Usually, if your strategy says you're going to lose 4 out of the next 10, and you've lost quite a bit lately, but this is a good high quality setup. You just got to keep taking those trades, even though you've lost. Because in the long run, you're going to win and you're going to become more profitable than you are losing. And then also know when you take a loss and you didn't follow your rules, you have to have the open mind. You have to have an open mind, know what you did wrong, and put in rules in place so that doesn't happen again. So say you trade pretty much what I trade, the ICT, TGR strategy, whatever it is. You get internal manipulation, SMT, sweep of liquidity, break of structure, whatever. And if you have a set of rules with your strategy of what you take, say you just have two confluences, and you just take a trade based off emotion, based off of FOMO, based off the fear of not catching it, and then you end up losing it or winning it, and you shouldn't have done that. You have to be open-minded enough to tell yourself, you know what, that was not a good trade. I can't be taking trades like that because in the long run, it's not profitable. In the long run, it's not a good habit. And I have to put this rule in place, and I have to have the discipline enough to follow it. If you're not going to follow it, then why the hell even put the rules in place? Then you're just trading purely off emotion and purely off of chance. You don't trade purely off of chance and emotion. You trade off of your strategy. Trading is simply that. And if you let the money and what trading can bring you get in the way and hinder your view, then your outside experiences with money, whatever you were brought up with, will come into trading. So say you've grown up, you guys don't always have a lot of money, and people around you are saying money's hard to get. You have to hold on to your money, you have to save it. When it comes to trading is simply looking at the charts. It has nothing to do with the money. Simply what is price doing, and how are you going to act off of what price is doing. But if you see price is running in one direction after it hit what you should have taken, but you hesitated on not taking that setup because you lost your money, and it's hard to get, because you've grown up with that your whole life. Money's hard to get. Money, you have to save it. Then you're going to hesitate on that because you're scared. You're going to let your fear get in the way. And then you're also going to, FOMO. You're going to have the fear of missing out because you knew that was your strategy, and your strategy usually wins. But then what? Your price starts going in your direction. You try catching it. You get a bad fill. You have a horrible stop loss, horrible RR. And that trade might hit. But guess what? You had a horrible RR, horrible entry, horrible timing on everything. And in the long run, if you have a 70% win rate, but you're hitting 1 to 0.2 risk to rewards, it's not going to be profitable. Simple as that. If you were a robot and people say it all the time, if you could just be a robot, act like a robot when you're in the markets, only take this setup, have no emotion, that's a good thing. But that's where experience gets hindered. Yes, you want to only take your setups and only have those rules that you follow. But with experience in the markets are forever changing, you also need to adapt. And with adaptation, you need those rules put in place. And you always need to be changing, not always changing them, but you need to be listening and following and looking in the markets and what is happening lately. If you're going through a little slump, what's happening lately, what's causing that. And you have to figure out and put in a rule in place to go around that. Simple as that. So you have to forever be changing. You have to be forever adapting within the market. But you always have that set parameters that work, and always follow them, no matter what. But with more experience comes more rules, more knowing within the market, more confidence. But without discipline, you can't implement those rules. You can say you shouldn't have done that, but then the next day you go and do it. That's not discipline. That's nothing. You say you need to follow these rules, but you never follow the rules, and then you end up losing or getting a bad fill, and then your win rate and your strategy go downhill, and in the long run, that doesn't help you at all. Let me drink. So yes, this trade I could have taken today is a clear trade. I would have taken that any other day. We have a draw on liquidity. We have a high time frame sweep of liquidity. We have a SMT. We got internal manipulation. We have a change in state. We have a fair value gap, imbalance getting filled with a bearish or confirmation candle in our direction. I would have taken that trade any other day besides today because it's CPI news data. And with my strategy, with my experience and my rules, I don't trade on CPI news data. Simple as that. And you guys need to do the same thing. Maybe not the exact same thing I do, but you need to figure out with experience within the markets what works for you, what doesn't work for you, when you should be trading, when you shouldn't be trading, what setups are good, what setups are bad, even though it's in your direction, or even if it's your strategy that's put in place, but you know it's not with the high time frame bias, it's not with your bias of the day, it doesn't go anywhere towards your draw. Sweeps of liquidity and breaks of structure and fair value gaps happen everywhere. Literally on every time frame, price is fractal, happens everywhere. But if you don't have those external draws on liquidity or other confluences telling you that it's going to go in your direction, you shouldn't be taking it. Even though it is directly your setup, you also need those other rules put in place. And those rules come with experience, and the only way you can put those rules and implement them is with discipline. So, I hope you guys learned something from that little yap session there. Just stay disciplined, guys. Follow your setup, follow your rules, keep on adapting them within the markets, and time will tell. Honestly, the market will always be there, and time will tell. You just got to keep on grinding, keep on being open-minded, knowing what you're doing, knowing what's wrong. Don't lie to yourself. Don't say, oh, that's not my fault. Don't blame the market. It's always on you. The reason why you lost is always on you. Even if it was a perfect setup, maybe you shouldn't have even taken that setup because what? There was maybe news. Maybe there was an external draw on liquidity. Maybe you didn't have your bias right. Or maybe it was a perfect setup and price just didn't want to go in your direction. And you have to take that and be like, okay. Now I know market gave me experience that I'm not going to win 100% of my trades. But that's okay because I can take this exact same setup in a different day. And statistically, it's going to work out in my favor. And you need to detach from the money, detach from your emotions. Every external event in your life does not correlate within trading. You have to be in the zone. You know, The Disciplined Trader, Trading in the Zone, both good books. I recommend you read them. And yeah, that's pretty much it for me today. I hope you guys learned something. Y'all gonna make it. Keep on grinding. I'll see y'all later. Peace out.